Hello, everybody. I'm delighted to be here on this edition of the AU Select Scoop. And it's good to be able to have this conversation during what are fairly interesting times with a lot of daily news flow, which is good to sort of see all the news flashes, but also unnerving sometimes as an investor. I guess a lot of the focus has been on the issue of tariffs. And the way we look at this entire tariff issue is that the US is trying to reset the terms of its trade with the rest of the world to the extent that some Indian companies obviously have significant exposure to the US. This could prove to be a challenge, though as of now we are in a 90-day pause and there are hopes that a bilateral agreement can be reached between India and the US. But the bigger point to remember is that exports to the US are less than 2% of India's GDP, goods exports to the US. So really the negative impact of it at a macro level is rather limited, and certainly India's exposure to the US in terms of exports is much smaller than what it is for many other geographies. So in a sense, we are less impacted than many other countries. The second thing to keep in mind is that the tariffs on many other countries have gone up far more significantly than it has gone up on India. This also therefore becomes an opportunity for Indian companies who are able to exploit this. But once again, we are in a holding period, and to my mind, therefore, the larger implication that I really worry about is the fact that there is a pall of uncertainty around the global economy. This is likely to lead to a slowdown in decision making by businesses looking to invest, and eventually even by consumers and their buying decisions. So we are entering in a period where economic growth is likely to be slightly softer, and there will be second order and third order impacts that the economy will have to deal with. However, what is important to remember is that India's macroeconomic credentials are in very, very fine fettle. So if we look at the fiscal side or at the monetary side, we have conducted our efforts, I would say, in fairly good stead. And therefore, we have managed to sort of avoid some of the challenges that other global economies are facing. Further, this places us very well to be able to respond to evolving situation in an agile manner, because we have been conservative in the past. Looking ahead, I think as investors, one of the things I would say is let the companies and the portfolio managers do the worrying for you. It is very difficult sometimes to figure out in this fast-paced environment what will impact companies, but I think companies with good managements will be able to handle their business and will be able to pivot to make sure that they can minimize the long-term impact on their business models. So a diversified portfolio is a great way to tackle this kind of an environment. And as I said again, let the quality managements do their job of managing the companies rather than investors panicking about it. From a valuation standpoint, we are very comfortable with large caps, which are trading in the fair value zone. They're not exactly cheap, but in the fair value. Our discomfort is more with the mid-cap space, where valuations are extremely high at this point of time, and also with the small caps. Our preferred suggestion to investors would be to explore hybrid funds, because they are favorably placed in terms of the carry that their fixed income portion of the portfolio is able to earn, and at the same time their exposure to equities in many cases is dynamically managed in response to valuations. So hybrid funds really, we think, are the best way to navigate the kind of volatility markets are currently experiencing. Finally, I would say think long term, because the most critical number in determining investment outcomes is the amount of time you stay invested in the markets. It's not about the annual return that you earn on your investments. With those words, I'll close this session of the AU Select Scoop.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.